Hello traders, welcome to Market Edge. Ahead of the trade, I'm Owen Larson with Mission Winners. This week, the market stayed in limbo. No strong breakdown, no meaningful breakout, just chop. Growth sectors lost steam, tech couldn't gain traction, and the major indexes failed to reclaim key moving averages. But underneath all that indecision, a few signals started to surface. Gold continued to shine. Real estate is showing early signs of quiet accumulation, and the term stagflation is creeping back into headlines and market conversations. So is this just a pause before the next move higher, or are we setting the stage for something more complex? Let's start with Pat Walker's ETF breakdown and get a clearer picture of what's unfolding.
So let's take it from the top here. Direxion Energy Bull. You can always see the name up in the upper left-hand corner, and I'll say what it is. What does this tell us? It's below all the moving averages. Be careful with energy stocks. There you go. This one, Dow Jones Internet. There's not a lot of power here. Until this starts pushing above the 200-day, which is the purple moving average line, be careful with internet stocks. Continue on. IBD 50 is just basing here. We'd like to see some power, okay? And until that happens, and again, the IBD 50 is a good proxy of growth stocks. There's just not a lot of power at this point in time. Also notice it fell on heavy volume and it rallied up on less volume. We need to see price push backed by volume. Volume equal power, and that's great to remember. Love it. Gold miners acting fine, in good shape. Bought it back here. In here, we're letting it work. We've sold some into strength. Looks good. Notice how it rallied up on increasing volume. We like that. Is there a spot to buy now? No, there's not. It's too extended. Important lesson for everybody. Don't buy extended stocks. That's an emotional decision, and it's not a good one. High emotions and good investing are mutually exclusive. Good to remember. Let's move on. Gold. Gold's acting fine. We had buys here and here. Bounce here, more. Look at the volume pickup on that bar when it bounced off the 21-day. Isn't that neat? People see that. Look at, and it's working. Closed near the highs, and it's trending. We sold a little bit into strength. We're in good shape. We're just, trends pay. Folks, this is a fact, not an opinion. Trends pay more than all the decisions you'll make. We just get in line with trends, and that helps us. Let's continue onward, shall we? Cybersecurity, lagging. Not a lot of power there. Leave it alone. Biotech, lagging. Leave it alone. Don't overthink it. There's nothing here. I showed you some that show strength. Key on that. That's what other people and institutions are looking at. So until this turns, you got to leave it alone. Biotechnology stocks. Online retail, not a lot of power there. Be cautious. Software, not a lot of power there. Be cautious. By the way, you can always see the name up here in the upper left-hand corner. U.S. medicine, I think they need some drugs. I had to say it. I'm sorry. It's dad humor. Just not a lot of power at this point in time. Mid-cap, not a lot of power. Now, this one shows a little bit more power. It's above the key moving averages. Resistance, check this out. Support above the 200-day, resistance at the fallen 50-day. Just tightening up right here. We need to see aerospace and defense push through the 50-day and push through with volume. All right? By the way, notice, up on heavy volume right here. Going sideways on decreasing volume. So this is something you might want to watch go forward on ITA. But it needs a good market also. The M and Mission winners, the markets. We need that. ITB, home construction, nope, nothing there. Leave it alone. IVW, here's the name, by the way. S&B growth, not a lot of power there. Be cautious with that. Small cap lagging. Needs to start showing some power. Price push with volume. Until it does, be cautious with that. IYR, U.S. real estate. It's picking up a little bit, but it's still below the moving averages. Fell on heavy volume, rallying on less volume. We need to see a little bit more power there, folks. Be cautious. Transportation's dead. Leave them alone. Airlines, not a lot of power. Leave it alone. KBE, banks. Banks, I'd like to see this lift up. I do like the volume that came into it, but notice, lifted up, heavy volume, but not a lot of price push. On that heavy bar, it didn't even take out the highs of this bar. So, and it's below the 200-day and the falling 50-day. Be careful. It tells you something else, not just in relation to this stock, the industry group. We're looking at the ETFs. The banks are languishing. Be a little cautious there with the banks. Insurance, languishing, not a lot of power. Like to see that straighten up. Regional banking, KRA, there's the name right there, by the way. Had some volume. You're not going to see this chart set up in any book saying, well, this is what you want to buy. Okay, I'm just telling you, not slamming it. We're just being realistic. Continue onward. Mid-cap. We need to see this get over. That's the 80 MA. We need to see this push through the 21-day. Tons of overhead supply. Heavy selling, much less buying. Be careful with mid-cap stocks. Oil services picking up a little bit. Okay. Tons of overhead supply. Needs to push above here with volume. By the way, there was serious selling in here. Look at that. And there was serious selling here too. You can say, well, that was a really good bar. Volume on that bar was just equal to these bars. It wasn't that powerful. So, and again, I'm not being negative. I'm not being bearish. I'm just reporting what is. Here's a beautiful lesson for everybody. We let the markets tell us what to do. Master analyzing price and volume. And we do that and we teach it all day, every day. Helps you make better investing decisions, make more money, and be safer too. Pharmaceuticals needs drugs. QLD, the NASDAQ 100, fell on fairly heavy volume here. You see this? This needs to show some life, okay? One saving grace is it does have a higher low. This low is higher than this low. But until it shows some power, be cautious. Same thing's true with QQQ, retailing, need more power there. Cloud computing's languishing at this time. Silver started to show some life, then it backed off. By the way, where were the ones that I showed earlier? Right here. Gold. See the theme? Gold. Gold. And then we go back to silver. What's stronger, folks? Gold or silver? Gold is stronger. Which ones do we own? The gold ones. There we go. Steel, no power, be cautious there. Semiconductors, not a lot of power. Same with the leveraged semiconductors. Spiders, this needs to lift up, okay? It just needs to take out these highs here and preferably take out the 21-day moving average. Right in here, that's the blue moving average. By the way, that is the 21-day exponential moving average. There you go. Till that happens, but please, by the way, I need to stress, don't think, oh, Pat's all bearish and negative. No, I'm just reporting what is. That's all. We just get in line with it. It works. SSO, the leveraged one, needs the power. Solar, not a lot there. Small cap, really languishing. Got to leave that alone. Oil's picking up a little bit, but there's a ton of overhead supply. Needs some more work, okay? Aerospace and defense has a little shelf right there on XAR. Something maybe watch going forward on XAR. Oh, and I'll draw this to help you. There you go. Needs to take that out with volume. Here's more analysis for you. That baby fell, gapped down on heavy volume. It rallied up on less volume, much less volume than it fell on. Be aware of that. It's up to a resistance line here. It needs to push through there with volume. You need that, folks. Again, volume tells us that other people will see what we see and they're buying. We want that. Biotechnology, there's nothing there. Home builders, languishing, leave it alone. Materials, okay? How do you build homes? With materials, not a lot of power at this point in time. Communications, not a lot of power. XLE, starting to show a little life here and a little life here. Tons of overhead supply, tons. So just be a little careful with that, okay? With XLE. What's it need then? You can say, well, Pat, then what does it need? Push through these tops right here and push through with really heavy volume. But no, it's below the falling 21-day. It's below the falling 50-day. It's below the falling 200-day. There's tons of overhead supply there, folks. Be aware of that. Every time it goes up, it's going to be met with sellers. So just something to be aware of. We like to educate here too. Financials kind of languishing. Industrials needs to show power across these tops here. And there was some selling in here too. Okay, so just be a little cautious with that. There is a line here. I'll draw this to help you though. There you go. On these videos, by the way, I don't want to just give ideas. I want to educate, teach, coach. what to look for in the charts. Most people don't even know what to look for. We do, and we teach it constantly at Mission Winners to help people. Let's move on. XLK really needs to come across these tops. I'll draw this to help you. This is the technology ETF. Really needs to start pushing above here. That's close enough. And push through the 21-day. And it needs to do it with good volume. Until that happens, just kind of be cautious with that technology. Consumer staples. Now this is interesting. You can say, well, this one doesn't look too bad. I just showed you a bunch of ETF industry groups that doesn't look that great. This one doesn't look too bad. Consumer staples, things consumers have to have. It's more of a defensive sector, right? It is. You got to have deodorant and toothpaste. At least I hope you do. You know what I'm saying? So it's defensive. It's showing a little bit of power. There's no super clean entry on it right now, but it just tells you there's a degree of defensiveness in what institutions are buying at this time. Can that change? You bet it can change. It can change the first part of the week. There you go. Utilities, some power, but not great. Healthcare's lagging, leave it alone. Consumer discretionary lagging, it's below the moving averages. There's not much there. We're about done here. Metals and mining, not a lot of power there. And oil and gas, look at that. This is really lagging. Needs some power. Till that happens, leave it alone. Retailing, not much going on there. Consumers aren't buying. They've hunkered down. Now, could that change? You bet it could with any of these. That's why we look at them every day with an open and objective mind. And that helps us. Continue onward. Software's lagging pretty bad. Leave that alone.
So there you have it. Most sectors are still under pressure. Growth names continue to lag, and even with occasional green days, volume is telling a different story. Institutions aren't stepping in with conviction. Meanwhile, defensive sectors like consumer staples and gold continue to attract attention. We're seeing relative strength, but not broad leadership. And in this kind of environment, caution isn't weakness, it's wisdom. So let's open up the tactical playbook and talk about how we stay focused, stay smart, and stay ready. Let's talk about stagflation because it's becoming a bigger part of the conversation and not just in theory. The ingredients are starting to appear. Stagflation is what happens when inflation stays high, growth slows down, and unemployment starts to rise. It's a tough environment, and it requires a different mindset from traders and investors alike. Right now, one of the biggest question marks is around tariffs. There's been a lot of noise. Some say they'll drive up costs. Others argue they'll bring long-term balance. Here's where I stand. I'm holding a wait-and-see posture. I understand the concerns, but I also recognize that President Trump is a deal maker, always has been. And these tariffs may very well be part of a broader negotiation strategy. That doesn't mean there's no risk, but it does mean there could be a bigger plan unfolding behind the scenes. That's not political. That's pattern recognition. And just like in the charts, we wait for confirmation. If inflation takes hold, we'll see it. If growth falters, we'll see it. And if capital starts rotating hard into commodities and defensive sectors, we'll see that too. We don't forecast, we observe. We don't predict, we prepare. That's the Mission Winners mindset. The key list gives us structure. Price action gives us truth. And volume gives us the footprints of big money. We're not trading opinions, we're trading reality. That's how we stay calm in the chop. That's how we stay safe when sentiment swings. And that's how we stay sharp when the future's unclear. Clarity, patience, discipline. That's our playbook. Now let's shift gears and check in on the max list. Because if leadership is going to return, it's going to show up in these names first. These are the institutional darlings, the big dogs. And when the market's ready to move, this is where the footprints usually appear. Now for Pat's max list breakdown.
Let's move on to the max list stocks. Here we go. There's Apple. It's below the moving averages. As you can see, falling 21-day, it needs to push up above there. Also, this is a valuable lesson for everybody too. Remember this, just because it's a green bar doesn't mean it's a good bar. Just because it's a red bar doesn't mean it's a bad bar. You see this bar right here? Well, that's a good bar, Pat. No, look where it opened. Look where it closed. It closed well below where it opened. It closed near the lows. Oh, it's a green bar? That's not good. That shows weakness. And it did it on increasing volume. They didn't buy that bar, folks. They sold into it. That is a powerful lesson for everybody. So we need to see some strength in Apple. Amazon, not a lot of strength there either, as you can see. It needs to start pushing up. Until it does, err to the side of caution. I need to pause here and share something. I'm not being negative. I'm not being bearish. I love buying stocks, but I want to do it at the right time. That's the kicker. And we will be ready. Alibaba, still chopping around, really needs to take out these highs here, and preferably the 21-day with volume. And again, these are the max list stocks. BIDU, languishing, be cautious with that. Goldman Sachs, there is a little level right here on Goldman Sachs. And I'd like to point something out that I think is relevant. Look at the volume spike on that bar. That's heavy. See those clean tops right there? That's something to watch going forward, okay? If it can push through these tops in a good market with good volume, that could be a candidate on Goldman Sachs. Continue onwards. Google, I'll draw another line here for you to help. Needs to take this out here, and it needs to do it on volume. Note, it's falling on a slight pickup in volume. We really need to see some power here, folks. And this is an investing maxim I taught at IBD meetups for years. The air is better above a rising 50-day. That's the green moving average. So we'd like to see that we'd like to see price pick up. Sounds like a recurring theme, doesn't it? Now here's MasterCard. I like this little base that's forming. It is below the falling 50-day. It is a max list stock. But notice here, you see this red bar right here? You can say, oh, that's a bad bar. Note where it opened and note where it closed. It closed above where it opened. There was support on that bar. This bar right here, it gapped down, and look at where it closed on heavy volume. It has support on the 200-day. That's the purple moving average, and picked up on a volume pickup right there. Something to maybe watch going forward is MasterCard. All right, continue onwards. Meta. Oh, by the way, these are just sorted in alphabetical order. I don't want you to think they're sorted in some kind of a unique way. No, just alphabetical. Okay, Meta, there's no power here. Be careful with that, okay? There's nothing there. Microsoft, there's no real power there. I mean, it's not doing much at this time. It will eventually, but right now, it doesn't look that great. Netflix, now look at Netflix. You can see this base on Netflix right here. That looks nice. Take out these tops. One very important point, and I encourage all of you to do this. Put notes on your charts. This stock had earnings, okay? And it's gapped up after earnings. So earnings are now out of the way. The key point, be careful buying just before earnings. You could be a hero, or you could have a lesson happen that you'll never forget. Big gap downs, painful. So we'll watch this and see what this can do. All right, the earnings are out of the way. The response was pretty good. I'd like to see it take out these clean tops across here. And yes, it's a max list stock. NVIDIA, there's no real power here until it takes out that white line. Okay? Right there. Till that happens, just leave it alone for now. NVDL, the same situation. Tesla has a small base right here. It's below the moving averages. There is some distribution in here, but note, look at the volume spike on that bar. Up. Look at the volume spike on that bar. Look at how it closed here and here. That's power. That's something to watch going forward. But be aware, it is below key moving averages. So we go far bigger when stocks are near 52-week highs. We go smaller when they're near lows. Remember that. It will really help you. We stack the deck in our favor.
That wraps up this week's Market Edge, ahead of the trade. Big thanks to Pat Walker for another great deep dive, and as always, thank you for tuning in. If you found this episode helpful, be sure to subscribe to Mission Winners on YouTube, visit missionwinners.com, and stay tapped into the tools, the training, and the clarity that keeps traders ready. Master your strategy, trust the process, and maintain your edge.